why interest on term loan is added in both the numerator and denominator in DSCR calculation. Let's understand through a small case. Yeah, look at here. Manu instructed Vinu to calculate the DSCR for X Limited, which is requested for a term loan. However, Vinu is unable to understand why interest on term loan is added in both the numerator and denominator. Please guide. Yes, if you look at the DSCR formula, you are going to see interest on term loan in both the numerator and denominator. First, I'll explain why it is added in the numerator. The idea is to know what is the profit before paying interest, because only when you know what is the profit before paying interest, you can compare the same with the repayment commitment, which is interest and principal. So if you are going to simply consider profit after tax, then that cannot be considered as the base for, or that cannot be considered as the source for repayment of interest and principal. It may be a source for repayment of principal, but not for interest, because this profit itself is arrived after subtracting interest on term loan. So that is the reason we add back interest on term loan. And what is the reason why it is added in the denominator? See, we are basically trying to measure what is the profit or cash profit available for repayment commitment. Here the repayment commitments are both interest and principal, right? So in the denominator, if you are not going to factor interest on term loan and if you are going to consider only principal, then that DSCR focuses only on the principal repayment. Then it can be given another technical name called net DSCR, and even in that case, in the numerator you cannot have interest on term loan. Okay, so DSCR basically measures whether the borrower is having capacity to pay both interest and principal. We call it as what? Gross DSCR. So there is another DSCR called net DSCR, which will compare only the profits available for servicing only the principal, whereas gross DSCR compare overall profits available for servicing both interest and principal. Okay, so the repayment capacity can be measured only when both interest and principal are factored in the denominator. Let's conclude. Interest is part of total repayment, and DSCR basically measures whether the profits are available for meeting the total repayment. Hence, interest is included. And here we go. Credit and Financial Analysis Mastery course. It's a comprehensive pre-recorded online course that comes with 15 modules of video lectures, basically 70 plus hours of video contents, multiple ebooks and reading materials related to credit and financial analysis that will make up another 30 plus hours of content. So totally it is 100 plus hours of learning resources. Then you will also get access to a private community in Telegram for clarifying your doubts in credit and financial domain. Then you also have the flexibility to choose 1 year subscription or lifetime subscription depending upon your learning goals. So by joining this course, you will learn basics of credit analysis, how to read balance sheet, financial ratio analysis, cash flow, fund flow analysis, how to arrive at credit risk rating, how to prepare CMA report, cash budget, how to assess credit facilities like CC, OD, LC, BG, term loan, how to write bank loan proposal, and you will also have access to case studies related to credit analysis. So to join this course, to know more about the course, comment CFA, and I'll share the details with you.